Hello, this is Matthew, and I welcome you to another episode of Unrewarded Intelligence, the channel that offers you free information about expensive matters. This week, we have Bitcoin at $20,625, $1 is 4,848 sats, and Ethereum at $1,052.17. The U.S. market activity picked up this week along with heightened volatility. Earlier in the week, the U.S. saw selling in BTC as participants digested the announcement of Celsius freezing withdrawals. There was also a move away from DeFi collateral as some customers looked to convert WBTC to BTC and sell DAI in favor of other stablecoins. Flows shifted towards buying as BTC tested the 20K level, and the Fed announced a 75 BP hike on Wednesday. The EU market has been active throughout the week. The market saw chunky two-way flow in BTC, ETH, ADA, and SOL. We had several accounts buying the dips on altcoins, such as SHIB, QNT, GALA, and sellers of MATIC. Mixed stablecoins flow versus USD, EUR, GBP, and CHF. After last week's downfall in performance, network activity rose this week. Specifically, active addresses increased by +7%, new addresses by +6%, transaction count by +3.8%, and daily active supply by +62%. The only activity-related metric that dropped was monthly active supply, which ticked down by -3%. Following 2 weeks of rising network market value, BTC's market value fell this week. BTC's market cap decreased by -19% week over week to $467 billion. However, average transaction fees, a measurement of network demand, rose by +18.9% this. BTC's hash rate dropped by -5.9% week over week to 213 exahash per second. However, miner market capitalization only fell by -18.6% to $108 billion, 23.1% of BTC's total market capitalization, pacing behind the +19% gain in market capitalization. Because prices fell more than miner market capitalization, miners may have increased their holdings. Still, Bitcoin's miner outflow to miner revenue, MOMR, contradicts this sentiment. The metric saw a +45.6% increase, suggesting that miner optimism may be falling as they are offloading more coins than they are holding. Now let's start with news of the world. New York City Mayor Eric Adams spoke out on Monday against a bill that is one step away from banning Bitcoin miners who do not use 100% renewable energy in the state for the next 2 years. The bill, passed on June 3, now only needs Governor Kathy Hochul's signature to become a law. Mayor Adams, a frequent proponent of the crypto industry, said he intends to ask Governor Hochul to veto the bill due to the economic damage it will cause. According to data compiled in 2021 by Cambridge Bitcoin Electricity Consumption Index, New York is the 4th biggest contributor of hashing power in the U.S. Wasabi Wallet released the newest version of its Bitcoin hot wallet, focused on accessible coin joining features and an improved user experience. Russia's state-owned oil producer, Gazpromneft, and U.S.-sanctioned BTC mining hosting firm, BitRiver, plan to develop crypto mining facilities using stranded natural gas. Gazpromneft will provide energy to data centers set up by BitRiver either at new oil fields where transportation infrastructure has not been set up, or at remote sites where the transport is too expensive. BitRiver's founder and CEO Igor Runet said, over the next 2 years, BitRiver intends to implement projects to create its own data centers for power-intensive computing with power scaling up to 2 gigawatts, including associated petroleum gas, which will additionally provide high and stable power consumption. BitRiver is one of the largest mining firms in Russia, with its local subsidiary managing over 300 megawatts of data centers. El Salvador's finance minister said that the BTC price crash poses extremely minimal fiscal risk to the nation-state Bitcoin adopter. Bitcoin mining company Mawson Infrastructure Group produced a record-breaking 185 Bitcoins worth $3.8 million in May. Production levels showed an +8% month-over-month increase with a yearly increase of +362%. The company added 4,000 ASIC miners to its fleet and has expansion goals planned into the first quarter in 2023. Spanish airline Vueling will begin accepting Bitcoin and other crypto assets as payment in early 2023. The trading pool on Curve that large institutional investors such as Alameda Research and Three Arrows Capital have used to sell their staked ETH or STIF tokens is nearly drained and heavily imbalanced, potentially trapping participants and crypto lender Celsius. The urgency to sell came because the price of STETH lost its peg to the price of ETH. Since early May, the pool's total value locked fell to $621 million from $4.6 billion, data shows. The pool now has almost 5 times as many STETH as ETH, making it expensive or impossible to swap large amounts of tokens. Billionaire Tesla CEO Elon Musk expanded on his plans for Twitter, including crypto payments, in a leaked Q&A session with employees. Musk said money is fundamentally digital at this point. It would make sense to integrate payments into Twitter so that it's easy to send money back and forth, adding that this would include currency as well as crypto. Musk mentioned that there are still a lot of bots and crypto scams on Twitter. Bitcoin hash rate reached a new all-time high of 231.4 exahash per second on June 13. Non-fungible tokens are still a gray legal area in China, where, unlike cryptocurrencies, there's no official ban on NFT use. The popularity of NFTs is rising as data shows that the number of NFT platforms in China grew from 100 in February 2022 to over 500 despite warnings from the local authorities. Tech giants, including Tencent and Huawei, are pursuing metaverse-related trademark patents. In the exchange stock market, all ETFs in the cohort saw AUM fall by at least -22%. XBTF saw AUM fall the most at -30.7%, followed by BITS -26.7%, BITO -23.6%, and BTF -22.1%. All of the tracked ETFs saw trading volume rise week over week. BTF volume grew the most at +365%, followed by BITO +254%, XBTF +177%, and BITS +112%. XBTF is the only ETF within the cohort trading at a discount with its NAV while the rest trade at a premium. Meanwhile, in the decentralized finance universe and NFTs, Solana plans to introduce a fee prioritization model. This improvement was in response to the network outage blamed on bots overwhelming the network during an NFT launch. Solana co-founder Anatoly Yakovenko wrote a Twitter thread on how the new fee system will work. Participants can bid with a higher fee to prioritize their transactions. Unlike Ethereum, priority will only occur within certain apps or protocols, not the entire network. This improvement could improve Solana's network stability to become more resilient toward bots spamming the network with millions of transactions. This is all for today. The text version is in the description. Thank you for supporting our channel. Use this information wisely, stay sharp and illuminated. If you enjoy this session, please support our channel by clicking like and subscribe, and we will keep you updated with the news.